Yo, what's up, guys? Happy Mondays. How's everybody doing? Hope everybody had a really good weekend and the rest of the weekend was good Halloweens. Setting up my sheet here. Market was crazy today. Thought we were getting pretty bullish, but market kind of came up pretty hard. Stream is alive. What's up? What's up, young Bo? What's going on, Hungry? All right, so we got some interesting earnings for today. We have Diamondback Energy, we got the Clorox company, Chigs, NXP, Avis Budget Group, and Mosaic, Simon's Property Group, which we just started that play on. I low-key want to see this company die though, Avis Budget Group, because they ran so much. It's almost like at a point of stupidity of how much they ran. Oh, I totally forgot about this company. This is like it's like another semi company in a way. They've been running up all year, man. CRUS earnings per share is $1.82 as opposed to $1.63. Sales is 465 mil as opposed to 450 mil. Chief financial officer to retire. Oh, that could be a little bearish. This is a 44% increase compared to the same period last year, and 34% increase in sales compared to last year. Where was the stock trading last year? Around 70s. Right now it's at like 82. Pretty cheap. Pretty cheap. You would think the stock would run a little bit further. So I kind of like that. That was a pretty interesting. That was a pretty good earning, and stock is relatively cheap to a certain extent. Let's look at the market bubble real quick. Damn, Tesla on another tier today, up 8% almost. Tesla is literally going parabolic, man. I don't know where it's gonna go at this point. Franklin Resource also went up a lot today, 11%. This is like a super OG dividend stock, and so it's almost never made this move. So if people had calls on it, probably like up thousands and thousands of percent. Las Vegas Sand, for whatever reason, decided to run today as well. Feels like a trap at this point. Wow. Fort is also up a lot. Starbucks, huge recovery. We might come back to life at 115, man. Sheesh. Align had a pretty good earnings last time, doing some recovery there. Discovery finally finding some bottoms. That might be something to get into tomorrow. Maybe some continuation back to $26. Facebook recovering well. Home Depot, finally, it's about to die. Google not looking so hot. Netflix neither. Microsoft, yo, a lot of these big techs aren't looking so hot. So Microsoft just got that red candle. That's looking kind of sus. Google as well, big red candle, closed lower than Friday's, super sus. And like Home Depot too, right? Amazon as well, all sus. Yo, us and friends, thanks for subbing, man. Appreciate you supporting our channel. Thank you very much. For 8 months, yo, what? That's crazy. Oh, let's check out Chig. Ooh. Oh my god, Chig's got molested. Should have done a lotto play on this, huh? I knew Chig was going to be a move though, so I knew like it definitely wasn't going to be a calendar play. Because almost every time Chig had earnings, it was either like up a lot or down a lot. But they've been going downhill lately. Let's check this out. Let's check out this earnings. Net income 33.9 mil. Sales is 171.9 million. Missed estimate of 174. Compared to last year, this was like 11% increase. EPS is apparently 0.2 in line, they said. Sales for next quarter is weak as hell. 194 to 196 mil as opposed to 240 mil. They expect to miss the full year sales guidance as well. Let me pull up real quick on Chigs. I think Chigs is just like Chigs is one of those stocks that just like overran because people like it, you know, like college students like it and all that stuff, and they just think it's a good investment. But honestly, the company doesn't really make that much money. So it's, you know, because it's gone parabolic. Like, look, man, the company was trading at $8. That's reasonable value. It doesn't do a lot of things. And then it even went as high as like 30, 40s. But then over here, it just went nuts, you know, to like $100 and something. And it just got to the point of like unreasonable value where the earnings per share wasn't even catching up. Because Chig's been around for a long time. Like, I even used Chig's when I was in college. And that was like a long time ago, you know? Back in my days. So last time they had earnings, big drop as well, 96 to like 80s. Even this earnings, you know, it was like pretty wild there. This earnings too, big drop from 87 all the way to like 72. So it's pretty common for this company to have big drops in earnings. like either 88 to like 78, so $10 drop. So we're over here. I wanted to like start a short position on it, like a bearish put position, but it was already down so much. I didn't want to kick a dead horse, you know? Like, it's like, you know, like it's already at like this level here, give or take. And I was like, man, how much more can this dead horse go, you know? And at the same time, I wanted to start flat play, but then I was like, nah, it's too volatile. It's too volatile as a company. So next level would have been like 38-ish, but then I was like, nah, no way, right? So didn't really want to start that position. So these are some levels that, you know, could have been like possibilities on check, 46 and 38, but tricky, man. Yeah, us and friends, man. You've been around for 8 months, bro. Thank you. Appreciate that, man. One of the first subscribers. Damn. You're one of our founding subscribers, bro. Thank you very much. Young Bo's like, bruh. Why is chick down so much? Shouldn't be up to students. What's up, Professor Glass? Dylan? O's earnings. I did not go over O's earnings this morning. We can check that out. Let me check out some of the other stuff. Oh my god, dude. What? Avis Budget Group up again. Dude, this stock is like Tesla. It's like the Tesla of rental cars, man. It's like, look at it. Look at it, man. Look at this. It was as low as $10 if you bought this in March 2020. If you had put, you know, $1,000 in March 2020, you would have 17,000 or 18,000 by now. Oh, no wonder. I was like, I don't remember this Us and Friends guy. Sus. Now it makes sense. This freaking guy XY triangle. Let's see. So Avis Budget Group. I gotta ask my friend what's up, man. He keeps telling me he thinks the company is going to shits. But because he works for like the headquarters in New Jersey here. Is the headquarters really in New Jersey, or is that one of the sub headquarters? Nah, I'm pretty sure he works at the headquarters. Earnings per share is $10.74 as opposed to $6.50. Sales is $3 billion as a 2.72 estimate. Margins is retarded. They make so much money in margins. 850% increase compared to the same period last year, and 95% increase in sales compared to the same period last year. So let's see where the stock was at compared to last year. Company was trading around $29. Now it's at $181, actually $182. Wow. How do we even do the math from that? 29. Like, if it was 29 times sales, you know, of like 95%, or even round it up to 100%, right? That would put it around like $60, $58, you know. But if it was times it by a percentage of like 8.5, put it around 200 and something. I mean 246. That's too crazy. I don't know how they can continually go through that though. That would be wild. What's up, Mass Appeal? What's going on? Wow, man. What a monster. What a monster of a company. What's up, Gemini? Any opinion on Pfizer going to earnings? We did take a lot of position on Pfizer in our stock account challenge in Xtrades. I'm not sure if you were with us or not. We're a little bit. I'm personally a little bit bullish. I mean, not bullish, bearish to flattish on Pfizer. I mean, I like the company overall. I think they could potentially get stuck at this $43 to $42 range. So I started this pretty flat to bearish position. So kind of expecting them to stay under 45. Now I could be wrong, but If they could stay between 44 to 42 range, we could potentially make a lot of money. Um, you know, but if they blow past 45 plus, we're in trouble. If they blow under, we're also in trouble. But I don't think we're gonna go under. I think at worst case, we'll probably stick around 42 because they got the vaccine news, they got all the good stuff. But at the same time, that's also partially priced in. So if there's anything I know about Pfizer, they're like slow as they're slow as hell, man. So they might not move that much. So I'm kind of expecting them to be within the range. If that makes sense. Thank you. Oh yeah, if you guys have a chance, please check out the survey that Young Bull posted um, for our October trading post here. And then vote for the people that help you out, and the analysts that gave you great insight, profit, knowledge. So, kind of like just pick whoever you like and let us know. Like Young Bo, don't forget to vote for my boy Young Bo on the list here. And Angelic or KJ or Moonshot, any of these guys that's helped you out personally or in the chat. And then also don't forget about contributors and junior trader and moderators like Hawaiian Beef, or like JP, Omar. And then we got some of these other people that hasn't been up yet. Ube's here. Interesting. Like Holmes or Dizzy, or even Tom P if he's still around, or Westwood Equity. I'm not sure if Tom P is still around. Haven't seen that guy for a while. If you are to prefer the following, which one would you choose? 45 to 80, 75 to 85, large loss, or 45 on small losses? What? Does that even make sense? Wouldn't it be like large gains and large losses with the 45 to 50% win rate? Is this a typo? Interesting. What would you guys pick? Which one would you guys go with? That's a good question, man. Freaking beefy. Ooh, MCK raised their guidance. That's pretty bullish. Keep an eye out for that. They just big pop after hours. Holy smokes. 208 to 216. So MCK is a pretty essential company. MCK is a leading wholesaler of branded, generics, and specialty pharmaceutical products to pharmacies, right? So they're retail chain, independent, and mail orders, hospital networks, and healthcare providers. Along with American Source, Bergen, and Cardinal Health, the three account for well over 90% of the U.S. pharmaceutical wholesale industry. Outside the U.S. market, MCK engages in pharmaceutical wholesales and distribution in Europe and Canada. Additionally, the company also supplies medical, surgical products, and equipment to healthcare facilities and provide a variety of technology solutions for pharmacies. So this was a huge company I took a big bet on last year when COVID happened, and they were like extremely cheap, like in the $130 range. So now they're like $200 plus, which I think is still pretty cheap, because this is the company like distributes everything from like the vaccines to like things related to the vaccines to all the other drugs, and they're a very safe and long-term company. They've been doing really well, extremely good earnings and stuff. Let me see what the earnings per share was. Thank you, Kip. We appreciate you, man. Oh, Young Bo, don't forget to post on the YouTube side too. So MKC reported earnings per share is $6.15 as opposed to $4.66. Sales is $66.58 billion as opposed to $63.12 billion. This is a 28% increase compared to the same period last year, and 9% increase in sales compared to last year. So let me check the stock price compared to last year. Last year's stock price was trading on like 140, 150 to like 185. 2-year highs puts around like 173, 172. So we'll put around there. 172 times 1.09 puts it around like 187. 1.28, 220-ish. So somewhere between 187 to 220s. If you calculate it in terms of like EPS and margins increase, which is somewhat of a closer calculation, it'd be like 220s. If you calculate strictly on revenue, it'd be like around 187. So if you see it come back down to that range, it's probably a good buying opportunity because there's some support there too at 187 actually. Let's check out Clorox. They've been missing the last few earnings, so let's see how this earnings do. Oh, Clorox is a big move after hours. Young Bo's favorite company. Yep, I'm gonna look at relative income group right after this. I got you. They were this morning, I believe. So Clorox earnings per share is $1.21 as opposed to $1.03 estimate. Sales is $1.81 billion as opposed to $1.7 billion. We affirms the guidance. This is a 62% decrease compared to the same period last year, and 5% decrease in sales compared to last year. So they were struggling a little bit, having an extreme hard time beating last year's numbers. The company was trading almost at $220 last year, and before earnings today, it was trading at like 160. So it's dropped a lot compared to last year's highs. On a 2-year high basis, though, the company is pretty close. March 2020, the company was trading around like $778. So I still think to a certain extent the company is still at a discount. If we look at a 2-year basis, growth, 2-year growth basis, I'm pretty sure they're probably still growing pretty well in the 2-year time frame. But obviously it's going to be very hard for them to beat last year's numbers because last year was like the peak of COVID. So they probably have ridiculous amount of sales. So net sales decline. So they're still having a 21% net sales increase on a 2-year stack basis, which is good. So the stock is extremely undervalued at this point based on that 2 years basis, which is what I was just talking about before. The other thing is, though, they are driven by lower gross margins, lower net sales, and one-time non-cash remeasurement gain in the year ago. I was just talking about how that didn't count. But they are driven by inflation situations where materials are costing more. So the environment remains volatile and we expect cost pressure to persist. Our first quarter performance, coupled with the actions we're taking, puts us on track to meet our fiscal 2022 outlook. Importantly, we also remain focused on delivering against our strategic priorities to create long-term value for our stakeholders. It's a good company. I like it long-term. I don't see why not. Just not a popular company, man. And honestly, they need a good sales team, man. They need to be selling more Clorox. They need to be selling Clorox like liquid gold, man. They need to go to the gyms. They need to go to the casino. Be like, yo, Clorox, Clorox, Clorox. They need to just throw at people's face. They need to do more marketing too. The SPG come out? Did I miss it? Damn, SPG's up at the hour. Scam. Let's check out Relative Income Group from this morning. So Relative Income Group reported this morning, they came back down from the 5-day highs of $74. This morning was quite a drop, seeing some recoveries and drop again a little bit. Kind of weird here. So AFFO was 88 cents, up from 86. Sales was 464 million, beat estimate 442. This is a 2.33% increase compared to the same period last year. And sales was a 12% increase compared to last year. So it looks like sales are doing good. Earnings are good. They also increased the guidance as well, from 3.44 to 3.49 to 3.53 to 3.59. So overall, I think it was a pretty decent earnings. Let me pull up here. Net income increased a lot compared to 2020s. Whoa, they're doing some big things. This is apparently they invested 1.61 billion in 308 properties and properties under development or expansion, including 532 million in Europe. Debt to EBITDA ratio was 5.5 times. Oh yeah, they're also doing a merger. .2% annual growth based on the midpoint. Revenue is definitely doing better than last year. Income per share is doing better than last year so far. Whoa. So rent collection is back to almost 100%, which is really good. Stock split incoming for ANET. Did they announce that? Yo, what's up, Fiat World? So this is pretty good. So last year, I remember they were struggling. They had like 65, 70%. They're at 99% now. That means everybody that's renting them is paying them. They don't have any deadbeat tenant anymore on the commercial side. So that's pretty good. and you know, obviously with AMC not collapsing is also a big thing for them as well, because theater industries, you know. They also announced a dividend increase. Buy more. I might sell another put position at the $70 strike to see if I can assign. You're waiting till we enter O as well? Me too. I think like 2-3 months ago, I saw a put position at the $70 strike. I think they were 66 at that time, and and I collected like about $400 and something premium on it. And I actually end up getting assigned shares at $70 after collecting the premium. And then when it ran to like 72-ish, I sold calls against it at the $70 strike again. I usually always sell 1 month out for O, and then the cost got taken away. So I've been waiting to get back in. Been looking for opportunity, but it's been trading pretty strong above 70. Probably one of my favorite real estate stocks. Let me pull up on the chart here. So these are some of the ranges I had on it. Last time we had that buying opportunity at $65. That was a huge discount. Oh, I actually been following this chart pretty good out. So I didn't even anticipate this move here. Did not even see that coming because I haven't been looking at it for a while. But actually, if this move comes down, this is a partial buying opportunity here. And this would be a secondary buying opportunity at 65. If that happens again, so I still think it's going to eventually come back to pre-COVID levels, considering how great that report was, 99% collection rate, and you have like the fact that the movie industry isn't going bankrupt anymore for them, so this should be okay. So that's the chart on O, if you guys want to check that out. You sell $65 puts every month. Sometimes if I'm like really bullish on the stock, like last time when it hit 65, I sold $70 because I believe like it was gonna bounce there. So that's why I like to sell it a little bit above. But it depends on, like, you know, obviously selling 65 is the better opportunity. Because, you know, in either direction you'd be okay. Yeah, and you can usually only sell monthlies on it too, so. But if you're bullish, next time it hits 65, try selling the 70, man. You get paid a little bit more and it'll pay off a little bit better, slightly better. Because you also want to get assigned too, you know, in addition to collecting the premium. Oh, you know what else came out? SKT also came out. So SKT is also like in the real estate industry, but they're a little bit like more DG. Oh yeah, Winnebago killed it today. WGO, one of the other stocks that a few of us were scared about. We're like, oh no, we're gonna die. So Tanger's factory outlets. So for those of you guys that aren't familiar with Tanger's factory outlets, it's pretty cool. They're pretty big mall. They're like this. They have these centers where you go. They have like Michael Kors, Gucci, and all that stuff. You can check out. And they've been running a lot of promotions too. It's a pretty cool company, but I don't know how much money they make though. So FFO is 47 cents, up from 44. Sales is 112 as opposed to 91, so they're doing pretty good. Seeing some recovery from last year, up 8.9%. Company at pre-COVID level was 16-ish, so it's already recovered to that, or even a little bit more than that. So if anything, out of all three companies between SPGO and Tangers, I would think this one probably would cover recover way better than all the other ones. And, you know, in regards to how they're doing as well. ANET up $25 after hours. Yeah, BIIB back over 270. I was a little bit worried about it. I was considering cutting it today when it hit 273. But I think I'm just gonna hold, man. I thought the market was gonna go down soon, but you know what? I have enough positions to handle both sides. So I'm gonna keep this as one of my bullish positions. It's looking a little bit better on the chart too, on BIIB. So I remember you had me look at it when it was like 260s, and I got a little bit shaken myself. But it did look like that was the bottom. It's starting to look like that was the bottoms. So hopefully it doesn't do this and find us a lower low. I think if it continues to move, we'll probably get back to 290 level and we'll be good. I only have 100 shares right now, so I'm praying, man. I'm praying with you, hoping it plays out with us. MXPI reported as well. Wait, so the ANET said they were gonna split? What did they say? Or were you guys just joking with me? Oh shit, you guys weren't joking. They are gonna do a split. ANET's board of director has also approved a 4-to-1 split to make the stock more accessible to order-based investors. Each shareholder at the record of November 11 will receive 3 additional shares for every share held on record day. Oh, forget it. Let me go to my IBKR. Yo, chill, guys. You know, ANET's a pretty shitty stock. Don't go too ham on this split. It could be like another ISRG. It's a pretty like unpopular stock, man. I mean, I will buy some shares right now, but I'm just letting you guys know it's a pretty unpopular stock. Don't go too crazy. Let me see if I can catch that dip move. What do we have? 4.0. Ah, dang. Why is my candle showing a move back to 408? Did it move back to 408? Zero two. Hold up. Give me a second, guys. I'm trying to pick up some shares. Amen. It's at peak all-time high, man. It's also hitting the top of the trend line today too. Why do stock split when they're all-time high? The liquidity is really bad. I don't even know if I can get fill. Oh, shit. You got me. You got me. No, but it is a crap company. Like in the sense that really really bad liquidity. Um, in that sense. So like I have gotten like raped before. So just giving you guys the heads up. You know, like it's. And you have these damn guys selling positions too, man. Unloading, like they know they're doing a stock split. Why are they unloading? You know what I mean? I can take a look at these for you guys in a little bit. Give me a second. We're just talking about this ANET stock split right now. So ANET is a software and hardware provider for the networking solution sector. Operating as a one business unit, software and switching and router products are targeted for high performance networking applications, while service revenue comes from technical support. Customers market include data centers, enterprise service providers, and campuses. The company is headquartered in Santa Clara, California, and generates most of its revenue. I don't know what it says after that. In the Americas, it also sells in Europe, Middle East, Africa, and Asia Pacific. So, but as you can see, like liquidity is really, really trash here. You see, like the after-hour volume is like it's all over the place, man, all over the place. So that's probably me getting filled right here for like my 20 shares at 433. Because I don't want to start a big position. It's such a weird stock, man. We can completely get annihilated here too, because it's like 408 to 433 is already a big move. But let me read into that report to see if it makes sense in the first place. Because generally, I'm pretty bullish on stock splits. And I like companies that do stock splits because they naturally are bullish for the company. They naturally run a little bit further. So here's them saying that November 1st, the company is, announcing the 4-to-1 stock split. And they also increased the authorization to purchase and buy back additional $1 billion of their shares. So what's $1 billion to this company, right? Market cap is at 31 billion. It's like 3%. Yeah, 3.2%. And stock price has already gone past that, in that sense as well. But let's see how they're doing overall. Revenue 748, an increase of 5.8% compared to the second quarter, so previous quarter, and 23.7% compared to last year's. That's good. Margin's a little bit weaker compared to previous quarter, but a little bit better compared to last year's. EPS pretty good compared to last year's. They said we're experiencing strong demand for our pioneering client-to-cloud networking portfolio across all customer sectors. Despite a challenging supply chain environment, I'm pleased with our delivery of another record quarter of Xtrades financial result in Q3 2021. Apparently, they're coming out with some stuff. They've selected to build Australian Security Exchange next generation campus network. Interesting. So these two last things are pretty bullish. I don't think we see a guidance, do we? No, we do have a guidance. Guidance at 775 to 795 million. What was it this quarter? More than this quarter. See, did I get filled? Did I get filled in this garbage? I did get filled in this garbage. That was me here. Damn, now I gotta unload some garbage in my portfolio. But yeah, I saw some of you guys asked about some charts on the YouTube side for IMMR. What is this? Emerging corporations. Looks like they had a very big move today, coming into a little bit of resistance on the chart here. So we got slight resistance here at 927. Looks like you got smacked off a little bit from that. Next big level could potentially be like somewhere in the 10s range. Could see some resistance there as well. Okay, so that's IMMR. CSCW was pretty big a while ago due to NFTs. NFTs making another run again. It's looking pretty good on the chart wise. So you have like you have some major support here. I was looking for it to touch there. Didn't look like we were gonna touch it. I do have small positions of this company because we're getting a lot of popularity in crypto again, and like, you know, since it's kind of crypto related, it's like, why wouldn't this stock run, right? So it's been lagging a little bit. A lot of NFT companies could potentially be making a comeback. So these are some levels that we're looking at. CSCW. So this is also another good level here. So 71 cents was a good level resistance. We got a moving average resistance here, 85 cents. And then if we can get through this level too, if we can get through 85 cents, I'm pretty sure we can come back to 124s here. So that would be pretty good if we can come back to 124. That'd probably be where I would unload all my positions. CSCW. I hope that helps, man. AMD. Let's check out AMD real quick. AMD move today, pretty flattish. You know AMD. We're on that trend line resistance here. Could go either direction, honestly. But it's not an area I really want to start a position right now. Just because if I were to start a position in a semiconductor, I would probably start with TSM right now. AMD is like in this like almost like a possible reversal pattern to the downside. But who knows, man? It could do the same thing that Tesla does and just blow up, right? But their earning wasn't as crazy as the previous quarter. And then their other company, XLNX, was slowing down a little bit too as well. So that's kind of what dragged AMD down a little bit. So I'm leaning a little bit to the bearish side. But hey, man, if momentum comes in, I could be completely wrong. High quality as how to use EMAs. It depends. Everybody using differently. Like for me, I have 3 on my chart, so you know I'm looking for them as support and resistance. And some people look for crossovers as like, you know, like golden cross and death crosses and stuff like that. So it all depends on your trading style, whether you're swing trading, you're day trading, and stuff. But I mostly just treat them as like support and resistance. But I mean, if you wanna learn a little bit more, we also have mentoring. We also have mentoring sessions as well. So like for a lot of Xtrade members, if you guys upgrade to like lifetime, you get 2 hours of mentoring, and you can pick between like a few analysts, whether it's JTW, Timehawk, or me, and you know we can all teach like our different styles and stuff. Didn't you already use your thing yet, XY? The SPG come out yet? Damn. XY, you know who I think you should get mentored by? What's up? 3 days, no cool. XY, I think you should hit up my boy Xtrades, man. He's also part of the mentoring team. Elliot Waves, bro. The way. Why is Google down today? Let me see. Let's look at Google chart real quick. So Google had a pretty good bounce there. Looks like we had to move down a little bit. I don't know what to tell you, man. Let me see. Oh, Simon Group did report it. Apparently, there was a lot of sweeps today on the Google side for 2,900 calls. Oh, there was some talk about the YouTube fight between Amazon and Google a little bit there. Google is getting beat up all day today. Holy smokes. It looks kind of bearish. I mean, we have the top resistance from previously. Breaking under that, it's kind of pretty ugly. I think there's a possibility for Google to bounce maybe at the 2816 level. So if we don't bounce from there, that might not look so well. ARC. What are you talking about? What? 1,500 for ARC. You mean 150? ARC is only trading at 125. Oh, Tesla. Wow, look at this breakout in VUSY. What a move. So VUSY looks like it found support at that 960 level. And it's making the move back up. So we got some resistance right here. I think we touched it today a little bit. Yeah, this is a level I liked too previously. So I think we're touching that resistance a little bit on VUSY here. That's at 1392. We closed above this, so that's pretty bullish. But if we go under 1390s, that would be pretty bearish. Closing above it means we could potentially move to the next level. Next level is like 1550s, and then after that, after 1550s is like potentially 19s, man. Holy smokes. It's a big move for them. Why are they moving up so much? Oh yeah, I know why they moved up so much. It's because they're like in the AR space, and Facebook announced the metaverse thing. So now everybody is hyped as hell about like metaverse. So no wonder they're moving up. Oh snap. Let me see the flows, man. I feel like that could be the next opportunity. That could be like the next retarded run. Oh, people are shorting it today. Oh shit. Everybody and their mother is shorting it, man. They've been shorting it all day for the last 7 days. So dude, everybody and their mother, man, they're just like, who buys a $45 put on it unless they're extremely bearish on this company? They think this company is trash. Like, for somebody to buy $45 in the money put when the stock is only at $10 at that time, they hate it. Yo, hold up, Kip. Imagine they announce they have a partnership with Facebook. Ooh, where would this go? Where would this go, man? I don't know. A $45 put is not a hedge, bro. A $45 put, it's like, I'm gonna shoot you. A lot of people selling the $10 calls at the bit. So people are selling cover calls at $10. These people are regretting right now. They're regretting so hard. It's gonna run away from them. And then you got people selling $8 calls, regretting right now. And then people bought more puts for January 2024, $12. They want this company to die. What do they know? What do they know that I don't know right now? November 19, $13 call sweeps. So that's not a call on the buy side, that's a call on the sell side. So more cover calls being sold. GG. Short interest, good question. What is their short interest? What is the short interest? 21%, bro. So we're looking at VUZI. So their short interest is at 21% right now. And those people, so it's already starting to get heavily shorted. Anytime a company gets like above 21%, that's already like slightly heavily shorted, right? And then you have these people making like special short positions. So like this short position, it's like a advanced, it's more of a smarter move on short position, right? Nobody would ever really do this, you know, unless they're extremely bearish in the company, buying a 2024 $12 puts. You know what I mean? And then like this one over here where they bought like $45 puts at the ass, like this is being omega short. Like that position costs money, man. Let me show you. VUZI. So there's a company out there that is like shorting it. I mean, let me see. They're long in the put. What? 2023. They just bought the max strike, dude. They bought the max strike. So the reason somebody would buy the max strike on the put side, and there's only one reason for this, is because A, you're not paying premium. You're barely paying any premium when you do that, and you have to be extremely bearish. So if the stock moves to like $40, they're gonna lose $1,200. So it cost them like $2,700 to make this position. So the risk and reward isn't even there. So the only reason they buying that is because they're extremely bearish, and they don't want to pay any premium, so they buy super out the money on it. They probably have like double the position right now because it costs different at that time. Yeah, nobody would make that position unless they're extremely confident. Facts. That's true. Even the math I was doing, Tesla was already overvalued. Like even at the math I was doing, the best value for Tesla is at like $80. I mean not $80, $800. So right now it's like way nutty. And that was me being generous, man. Why not, dude? This is like the same thing, right? VR, AR, whatever. This is actually a little bit more bullish than VUZI. Oh, it's already a big move already. Huge move to all-time highs at 23. That's September 23. Yo, can VUZ do the same? Can we do the same here? Can we make that move back to 32s? Rape some people? I might start a lotto position for this. Let me see. I mean, November 19th is pretty far out. If we're bullish. Oh, dude, what? Cheap. This is cheap. You can do a no premium spread from like 14 or even 15, man. You can do 15 to 20s. Like, if you think it's gonna hit from 15 to 20s by November 19, right? Check this out. Look at this position. This position is dumb retarded. You're risking $80 to make $420, right? If this position, if we get that move back to $19, like we talked about, let's say it goes to like 19, what was it, 1950, right? You're risking $80. You could potentially make anywhere from 170 to 200s on an $80 risk. So that's 2 times return, man, if we make that move from 15 to 20. So what you're doing is you're buying the bull spread from $15 call side to $20 call side. And you sell the $20 call side. Easy money, man. Whew. Oh yeah, we checked out the Clorox ER today. It was pretty reasonable. They didn't make as much money as last year, but still a pretty decent company overall. Let me check out SPG real quick. Looks like it's up left hours. We didn't get that move downside that we wanted. Let me see what they said. Produce mass impressive third quarter results, they said. Oh, they increased their full year guidance and quarterly dividend. That's pretty bullish, I guess. They did take a pretty big L. Funds from operation was 1.17 billion. They made a little bit more from last year, 52% increase, but obviously they were gonna make more from last year though. Occupancy isn't that great though, at 92.8%, so not full yet. Base minimum rent per square feet was $53. I would think that's a little bit on the low side actually, but they're all over the country. So compared to New York, that's like nothing. That's like pennies on the dollar. Because I think New York's like, is it 500? Wait, oh, actually per month. I was thinking per year. That's actually pretty good. Oh, they started a premium outlet in Japan. Projected to open 2022, October. Simon owns 40% of this project. They also have another one in South Korea, and they have a 50% interest in this center. It's pretty interesting. They're expanding worldwide. So compared to last year, they made a little bit more, but I don't think that justifies like the huge move they had compared to last year's. So last year, company was trading around $60, $62. Right now, it's at $154. So almost like 1.25, 125% increase. Compared to 2020 levels, they're pretty close to that 2020 levels, but I don't think they like pretty reasonable here, because they took some losses over here in that March to like July quarter, if I remember correctly. So they took some losses here and some losses here where they made almost no money. And they still haven't made back the money that they usually make. So 2019 quarter they made about 1.4 billion. This quarter they only made about 679. So still in recovery phase where they haven't come back to that level yet, and stock price already here. Yep, let me show you the Clorox ER, and then I'm gonna end it. So Clorox earnings was $1.21 as opposed to 103. So that was they had a beat, a little bit better than estimated. Sales is 1.81 as opposed to 1.7. So that's a beat top and bottom. However, compared to last year, it was a 62% decrease, because last year they had a crazy year, right? On Clorox, and sales is 5.7% decrease compared to last year. But the company is also retraced a lot. It's coming back to this support level in 2018 and 2019 at the 160s range, and we had a nice bounce off there to 173s. So overall, I thought that at 163, I thought Clorox was pretty undervalued. Oops. So because that's one of the pre-COVID levels, and obviously the company like benefit a lot from last year, And even though they didn't make as much sales this year compared to last year, I think they still had a pretty good growth on a 2-year basis compared to 2019. So compared to 2019, they had a 30% growth, and stock price is trading at the levels of 2019 and pre-COVID. So if we were to take 30% growth from like 163, that would put the company at over like $200. So at the current price, pretty cheap. Unless inflationary pressure continued to hurt them. But we could potentially see a move back to 181 next if everything continues to be bullish. So that's the Clorox chart. CLX. I think that's pretty much it for today, boys. I'm gonna end it here. We'll be back here tomorrow at 4 to go over some of the other stocks from Pfizer, VP, Under Armour, Activision, Digital Turbine, Zillow Group, very interesting in that one. T-Mobile, XPO, kind of bullish on XPO a little bit, and so on. Yep, CLX at PFE tomorrow. Oh no, I bet you Lotto to the upside, right? I hope it works out for you, man. You think app's gonna bust? We see. I'm excited to see XPO though, because XPO is a logistics company. I would think they're making a buttload of money, but hey, who knows, right? I think I'm gonna Lotto some from 87 and up. I feel like they should be making buttloads of money. Like how are you not making buttload of money? How? But yeah, take care guys, and